Welcome back. You're tuned into the Editors Roundtable. Now, for this week itself, we had a lot of cement stocks, whether it was Ramco, Ultratech, JK Cement, or even Dalmia Bharat. All of them hit fresh 52-week highs. And the cement space on the whole was seeing renewed buying interest. So we said, let's check out and what are the top factors that contributed to this renewed interest in the cement stocks. Well, first up, remember, we're getting into an election year, and the street was factoring in a demand growth of close to around 8 to around 10% approximately. But it seems the start of this fiscal has been a little bit better. The push is expected in the second half, both from the housing as well as from the infra space. But now the street says maybe we could be surprised with low-teen to mid-teen growth. So that's for the industry on the whole. Well, the second factor is, consolidation has been talked about for the last 12 to around 18 months or so. But you've seen very limited action on ground. However, now there are hopes yet again that there could be some possible consolidation in the sector. Remember, you have a big, acquisition that was taking place out there. And the group was a question mark with regard to the debt on the books. That seems to have got sorted out. And that's why, in fact, the street again is hoping that maybe there'll be a few large players looking at buying some of these smaller companies. JK Cement, they announced very, very small acquisition of Toshali Cements. The deal was done at around $30 per ton. And it marks their entry into East India. So a small deal, but yet 150, 200 crore deal getting done. The street like that. The other one that the street is looking at is Sanghi Industries. Remember, we are aware that the debt in the books is high, the utilization levels are low, so a deal seems to be on the cards. And there were reports that indicated there were various suitors for this particular asset. On a valuation parameter, well, the stock has always been attractive, but can we see some consolidation? The street seems to think yes, maybe in the coming quarters we'll hear some part of that. And the third factor, which is a positive for the entire industry, is the cooling off of petcoke as well as coal prices. To give you a number, petcoke prices have cooled down to around $110 per ton. That's the lowest that we've seen in the last couple of years, since January 2021. So that's good news out there. Even coal prices have seen a sharp correction. In fact, if you look at it from the end of 2022, those prices are nearly half of what it was. So coal and petcoke prices have cooled off. That's what will give a bit of a fillip in terms of, margins from year on. And a couple of brokerages, whether it's Jefferies, they're building a 200 to around 220 rupees per ton increase in the EBITDA per ton. Even Axis Capital, they're saying that the EBITDA per ton in this year will go up by close to around 25%. Finally, the big points that you need to focus on, pricing hasn't improved that much, but it seems lower input cost and higher volumes. That's what will offset any kind of weakness in terms of pricing. So cement sector, can it surprise this year? That's the big question, and earnings could be upgraded if that's the case.
All right, thanks a lot for that.